Hello my friends. You remember we have talked in earlier session about the poverty and how India is suffering from poverty and why poverty alleviation becomes our main priority. You remember what we talked about the statistics related to poverty? 51.4% of farmer households are financially excluded from both formal and informal sources. Then total farm households, like of the total farm households, only 27% access formal sources of credit, and 1/3 of these sources also borrow from informal sources of money. Overall, 73% of farmer households have no access to formal sources of credit. This we have already talked in our earlier session. So, access to finance would be one of the very important thing for eradicating poverty. In that regard, many policy initiatives have been taken to facilitate poverty reduction, like banking sector reforms. We also know that how banking sector witnessed a large scale branch expansion after the nationalization of bank in 1969, and it facilitated the entire shift in the focus of banking from class banking to the mass banking. But despite all these policy initiatives and a lot of investments which were being made to address the poverty, yet poor were still out of the reach of formal banking institutions. The credit needs of the poor was not met, and poor were banking upon their informal sources of taking money. Many researches were done to find out as to what can be done about it. These researches was mainly done in the 80s, and what researchers revealed, friends, they revealed that whatever product of saving and credit were there with the formal institution of banking, that were not matching the needs of the poor. Then we also know the procedures of banking were very cumbersome, very complicated. And the poor are illiterate. It's very difficult for them to understand this and follow those procedures. Then for the banking system, it incurred a very high transaction cost to process those small loans or the small saving. And that is why it was one of the very strong factors for bankers not to entertain poor. Then very special poverty alleviation program also, they had saving element almost as ignored ones. Then the resources handled were often larger than the poor's capacity to handle. And of all the thing, what was the most important thing is whatever these initiatives were designed, the design was made by others and not the poor. So they were not able to understand what poor need. It was more a supply driven than the demand driven. Whereas what poor wanted? They wanted a mechanism to keep their limited resources. They got very little resources, so those limited resources safely. Then also the needs that they have, emergency needs of credit, that has to be met when they want it, without any collateral, without any condition. Then also they needed money or credit for micro enterprises to sustain their livelihood. Or they wanted a kind of credit product which was hassle-free and uninterrupted. Whereas what bankers were doing, the bank products were something which had very complicated procedures, as we discussed, cumbersome procedures. They've got fixed repayment schedules, whereas the cash flow of the poor is not fixed. It's more seasonality driven, and many other factors affect the cash flow of the poor. So that is why there was a mismatch. So after these findings of researchers, what was the outcome? That there was a need of banking products with the sustainable approaches, and those products should match the needs and capacities of the poor. There should be reduced transaction costs for banks to deliver that product, and also it should be a collateral free lending because poor are not able to afford collateral. So with this kind of outcome, microfinance became popular. So what is this microfinance? We have heard quite a lot about microfinance. Often we talk about it, but my dear friends, do you know what this microfinance is? Microfinance is the provision of a small amount of thrift, credit, saving, insurance and other financial services to be given to the poor residing in urban, semi-urban or rural area to enable them to raise their income levels and improve their living standard.
Whenever we really talk of credit, we invariably talk of men, we talk of business, we talk of large corporations, big houses, business houses. And when we talk about microcredit, invariably you'll think of women. And I guess it has a historical background also, because Bangladesh, Bolivia, other sort of pioneers in the microcredit movement actually really targeted poor women. And so I think that sort of became synonymous with microcredit.
So you had other government schemes, such as the most important one was IRDP, the Integrated Rural Development Program, which through which cheap loans with subsidy element were provided to the rural poor in order to improve their assets, in order to generate self-employment. And it is in this context that in order to provide some SOP for the poor, microcredit is now being advanced as a major initiative in terms of rural banking.
Now, how did it begin in our country? Usually whenever we talk of microfinance, we often refer to one term called self-help group. We will discuss about the self-help group in detail, about the modalities and the processes in our next session. But to give an overview, I'd like to share with you that beginning of this microfinance movement in India could be traced to the self-help group bank linkage program, which is popularly known as SBLP, and it started as a pilot project in 1992. This pilot project was initiated by NABARD. We know what NABARD stands for, National Bank for Agriculture and Rural Development. We'll discuss in the later part as to how this entire thing evolved. Now the experience of this pilot project, which was initiated in 1992 of SBLP, not only proved to be very successful, but it also emerged as most popular model of microfinance in India. Apart from that, with this experience, other approaches also emerged. One of the approaches is called as MFIs, which stands for Microfinance Institution, but it emerged subsequently. Now, recognizing the potential of microfinance to positively influence the development of the poor, RBI, NABARD and SIDBI, we know what it stands for, Small Industries Development Bank of India, have taken several initiatives over the years to give further boost to the microfinance movement in India. We will discuss about these initiatives a little later, but before that we're going to talk about how this microfinance affects poor and how was it evolved. Microfinance has a blend of formal and informal services, and also to provide flexible services to low income borrowers, the rural poor or the urban poor, for meeting their modest consumptions and livelihood needs. And it has not only made the microfinance movement grow at a rapid pace across the world, but in turn it has also impacted the lives of millions of poor positively. Here I would like to mention, in India, the number of SHGs who have got a saving bank account as per March 2009 is more than 7 million. So you can see the amount of progress this SHG movement has taken. Now, what are the various delivery models in India of microfinance and how this started? This is the time which I would like to share with you about that. Basically, this is one of those models which has been inspired by a model which is very popularly known as Grameen Bank model. My dear friends, you must have heard, where has this Grameen Bank model developed? This was in Bangladesh, and because of this model's success only, Muhammad Yunus of Chittagong University, got his Nobel Peace Prize. And why Peace Prize? And how is it connected with banking with the poor? Because Muhammad Yunus told that poverty generates crime and crime generates further poverty. So that's a vicious circle. In case poor needs are addressed, if the poverty is reduced, eventually the crime may also be reduced because it will give more justice, social justice to the people. So from that angle, it brings the peace in the world, and that's how he got the Peace Prize for banking with the poor.
Muhammad Yunus is the founder of Grameen Bank. Grameen loans money for self-employment to over 4 million poor women in Bangladesh.
You cannot get a dollar without a dollar in your hand. In the poor people, nobody gives the first dollar to catch the next dollar.
Dr. Yunus designed Grameen to serve people who have no collateral. 5 borrowers form a group and guarantee each other's loans. The repayment rate is greater than 98%. More than half of Grameen's members have moved their families out of poverty.
We have demonstrated beyond anybody's doubt that it works and is sustainable, and it can work in all kinds of cultural and economic situations.
Grameen Bank has become a model for hundreds of microfinance programs around the world, serving tens of millions of the world's poorest citizens. In this program, Dr. Yunus shares the experience and insights gained in his struggle to build the world's leading poor people's bank.
I toyed around several alternatives. Finally, I decided maybe I should link them with the local bank. Bank is the one who should be lending money. This is their business. This is their job. So with enthusiasm, I go to the branch manager or the bank manager who is located in the campus, propose to him that he lend money to the poor people in the village. He fell from the sky. He couldn't believe I even said that. He said, no, it can't be done. It can't be done. I said, why not? Because, he said, poor people are not creditworthy. What does creditworthy means? Creditworthy means he will not be able to pay back. I said, how do you know? Did you lend them at all? He said, no, I never lent them. So how do you know? He said, everybody knows that. Because they are poor, no matter how much money you give, they will eat and the money will be over. They can't pay you back. So I went to higher officials in the city, downtown. I talked to them. They said the same thing. So every time I go and see somebody, same thing. And it went on for months. I couldn't find the door to open. Then I learned something from them and I used it. I said, why don't you accept me as a guarantor? I become your guarantor. I sign all your documents. Risk is on me, not on you. You give the money. I thought it's such a straightforward proposal, they will immediately go for it. They didn't. In all, there were more than 6 months. Finally, I was accepted as a guarantor. And it worked. I was very excited that it worked. But the bank manager doesn't change his mind. He said it may work in one village, but if you do it in 2 villages, it will never work. I said, okay, let me do it in 2 villages. So I did it in 2 villages, it worked. He said, well, 1 village and 2 villages are the same thing. Maybe you should do it in 5 villages. So I did it in 5 villages. It worked. But he doesn't change his mind. After I have done this several rounds, and I realized that if I do the whole world, he's not going to change his mind. Maybe I should forget about him. So I thought maybe I should have a separate bank doing exactly what I'm doing. And that idea started haunting me, that why don't I have a bank for the poor people?
So what is this Grameen model, you must be wondering. I'm here to share with you. You know, this Grameen model was launched in 1976 in Bangladesh, and the purpose was to assist the poor family to overcome the poverty through supply of credit. In 1986, this was transformed into a formal bank under a very special law which was drawn to create this model and this bank. Basically, this Grameen Bank is owned by small borrowers, and majority of these borrowers are women. That's why it has led a kind of example before the world. The women earlier, as per the orthodox views of the banks, were treated as unbankable. Like the women can't handle funds, women cannot understand anything, women are illiterate, they can never reach banking, is what the very stereotypes bankers had developed earlier. Because of the success of Grameen model, the world came to know that women are the most trusted clients of the bank. Grameen has a speciality of very unconventional banking practices. What is unconventional about it? Here, there is no collateral which is sought by the bankers, but it has a very different form of collateral, that is mutual trust among the members of the group of people or the poor, accountability, transparency, participation and creativity. Another very special feature of Grameen model is that this envisages that banks will go to the poor and the poor won't come to the bank because it's difficult for them to reach the bank. So enhancing the access to poor, under this model banks reach to the poor. Now in this, what happens? There's a group of 5 members which are poor, it can be rural poor, urban poor, and they are the borrowers, and loan can be obtained by any of these members. It can be received in a continuous sequence, and new loan is granted only when the previous loan is repaid. The installments are weekly or fortnightly. Initially in the Grameen model, which is called as Grameen 1 model, there was more focus on credit facilities and less focus on deposit mobilization. But there was a slight policy change in year 2000 and they started giving more emphasis on deposit mobilization.
Jodiman Khan was one of the early borrowers. In December of 1979, she first learned of this new organization that would give loans even to a poor woman such as her. Today, she looks back on a different life, where every day was a struggle just to keep a roof over their heads.
কলা পাতা দিয়ে বৃষ্টি হইলে বৃষ্টি নামলে এই কলা পাতা দিয়ে ই করে থাকছি ছেলে মেয়ে নিয়ে অনেক কষ্ট গেছে
She was married in 1962 at the age of 10 and had her first child when she was 15. Her husband worked as a field laborer, making less than 20 cents a day, so having enough to eat was a constant struggle. It is with difficulty that she speaks of those times.
জীবন আমার মনে থাকতো ভাত আল্লাহ মিলাইব মধ্যে এখন মিলাইলো না ওই বড় ছেলের পেট আর ওই বড় মেয়ের পেট হইতেছে আমি স্যার আমি এত কইতে পারবো না আমার কলজা ফেটে আছে আমি যে জীবনে কি কষ্ট করছি আমি না কইতে পারবো না আমি হিংনা কইবার গেলে এখন আমি অস্থির হয়ে যাই আল্লাহ আমার এখন অনেক সুখী বানাইছে অনেক সুখী আল্লাহ আমার দিয়েছে একটা এই কাপড় পাই নাকি এক আসলা শুকাইছি শুকিয়ে নিয়ে এটা পিন্দা তার মধ্যে আর এক আসলা শুকাইছি এখন আল্লাহর দোয়ায় আপনাকে তো এখন 10-12টা করে ঘরে থাকি আর আপনাদের কাছে কি বললাম আর বলতে পারবো না
In January of 1980, Jodiman took out her first loan with a fair amount of trepidation. It was for a total of 600 taka, or about $10. With it, she bought a rice husker and began to husk and sell rice to the local vendors. Over the next year, she worked hard to make the weekly loan payments. Jodiman made her final payment on January 1st, 1981. For the first time in her life, she and her family were eating 3 meals a day.
ভয় তো লাগবো প্রথম প্রথম আনলাম মানুষে কইলো গ্রামী মানুষে কয় কি গ্রামী ব্যাংকের টাকা আনলে যে মইরা গেলে ওই ই দিয়ে পারাইবো কব্বর উপরে এমনি বলছে তাই 600 টাকা না তো একটু ভয় পেলাম তারপরে তো সাহস হইলো 600 টাকার কিস্তি দেওয়ার পরে সাহস হইলো তারপরে টাকা উঠান ধরলাম 2000 করে।
Over the last 25 years, Jodimon has successfully taken out larger loans and paid them back through a number of diverse businesses. Though not all her ventures have been successful, she has built up enough of a safety net so that a setback is not devastating to the family. Now her grandchildren enjoy a life that would have been inconceivable 2 decades ago. Jodimon will tell you that it all started with a $10 loan.
In Grameen model, there were 4 kind of saving product. We talk on Grameen 1. One is personal saving, second is special saving, then Grameen pension account and credit life insurance account. With 25 years of banking under Grameen model, the new model called Grameen 2 model evolved, where there was a switch over to individual lending from the group lending. In this, the speciality is that there are more flexible products which are suitable to everyday money management of the poor and also development of a micro enterprise. Grameen Bank 2 has the loan product, which is general loans, seasonal loans, family loans, and also a variety of almost a dozen kind of loans to suit to the needs of the poor. Now, how our SBLP model, you remember SHG bank linkage model in India evolved. In December 1984, the 5th General Assembly of APRACA, what is APRACA? Asia Pacific Regional Agriculture Credit Association. So the 5th General Assembly held at Bangkok and it exhorted the agriculture and rural development finance institution in the region to mobilize savings from the rural areas with the purpose of providing loanable funds for agriculture and rural development. And that time there were already experiments on with reference to developing self-help group among the rural people and promoting the saving and using these resources to meet the credit needs of the poor. So these experiments and experiences showed that SHG model is a good model and also it's a very innovative model. So given that kind of backdrop, in the 3rd consultation on the scheme of agriculture credit development, which is known as SACRED, Scheme for Agriculture Credit Development, it held at Rome in 1985, and it called for active promotion of linkages between SHGs and banking institution as a means of improving the access of low income group to banking services. Then further what happened is the executive committee session of APRACA held at Seoul in October 1985, and it approved the holding of Southeast Asian Sub-Regional Workshop to devise ways and means of improving linkages between banks and self-help group. Then subsequently in May 1986, APRACA Regional Workshop held at China, and in this it was recommended that a national level consultation and organization of national surveys of SHGs would be done in collaboration with APRACA and other agencies. Now further, a 6th General Assembly of APRACA held at Kathmandu, Nepal in December 1986, and it considered that a project proposal on promotion of linkages between banking institutions and self-help groups in rural saving mobilization and credit delivery to the rural poor. And it was decided that each member country of APRACA would form a task force to conduct a survey of SHGs, the SHGs which are there in their country, and thereafter formulate suitable national level program. So what happened after that? Consequent upon this, a task force, as was decided in the 6th General Assembly of APRACA in Kathmandu, Nepal, a task force was set up in India in the Ministry of Agriculture to identify the existing SHGs, undertake a survey of the groups means SHGs, and draw a plan of action for channelizing the flow of savings and credit between the rural poor and banks through self-help groups and identified concrete project for action research in this field. So accordingly, in 1987 February, it was decided that a study team led by NABARD and comprising of representatives from various financial institutions should be constituted to undertake this survey. And survey was undertaken in September 1987, and the report was discussed at 18th Executive Committee session and 10th Foundation Anniversary of APRACA, which was held at New Delhi in November 1987. This survey report laid the foundation of SBLP in India, and a pilot project in 1992 was launched. You remember I mentioned about it earlier. This was launched by NABARD, not just like that, but after extensive consultation with Reserve Bank, commercial banks, NGOs and other agencies, and it had the objectives: first, to evolve supplementary credit strategies for meeting the credit needs of the poor by combining the flexibility, sensitivity and responsiveness of the informal credit system. You remember we were quoting the outcome of the study researches which were done, that it was very difficult for the banks to involve poor because of many factors. So this was one of the objectives, to evolve those credit strategies which can meet the credit needs of the poor, and by combining what? The informal systems of flexibility, sensitivity and responsiveness, and also the strength of technical and administrative capabilities and financial resources of the formal credit institution. Then it had second objective, to build mutual trust and confidence between the bankers and the rural poor, which was otherwise not there earlier. And third objective, to encourage banking activity both on the thrift as well as on the credit sides in the segment of the population which the formal financial institution usually find difficult to cover. And that is what was happening all along. We discussed earlier, the poor was outer banking fold. So this is why it is called as innovative strategy. Microfinance is one of the innovation. Now, what is the core strategy of this SBLP? We know what SBLP is, SHG Bank Linkage Program. The first is, there is a basic human feeling of self-worth at its core, that every human has a right to live, every human has a capability to make his or her life of a quality. Second, building financial capabilities and self-confidence in the poor through internal saving and lending from their own fund of the SHGs, and it helps them to get out of those clutches of money lenders and pawnbrokers. Third objective, leveraging the strength of the formal banking system on one side and the flexibility of informal SHGs in the other side to provide adequate financial services to the poor. There are very specific design features of self-help group. My dear friends, we are going to discuss in detail about how this SHG functions in our next session. But for now, I would share with you what are the speciality of this SHG so far as the group design is concerned. It enables the self-selection among the rural poor. There are more women, that is almost the experiences have shown, more than 85% of the SHGs have got women. And then saving first and credit later. Then a group is financed only after 6 months. Why only after 6 months? By that time, group takes up or develops a capability to do the internal banking and also develop banking habits. Then there is a kind of empowerment by intra-group appraisal system and prioritization of credit needs or credit product. Then it has got shorter and more flexible repayment terms laid down by the members themselves based on their need and their suitability. Then it has got progressive lending. So you get one loan, then pay back and get another loan. So this is how the group decides. There is nobody outside who is going to decide that. It's the group decides about it. Then there is a maintenance of account by the SHG. So they get very empowered to maintain their account, they own their account, they know everything, so that's the process of empowering themselves. And then in that process they also develop a relationship with the formal banking system. And you remember that's what the country wants, that poor, instead of getting exploited by those money lenders or other sources which are exploitative in nature, there should be more relationship with the formal banking system, so there's a transparency and the much more genuineness. And then also the rate of interest about the banking product which SHG decide, they decided as per the market rates. So nobody is going to decide for them, it is SHG themselves. So above all, what's so special about SHG approach is there is a flexibility in the approach to suit the needs of the local poor and also the convenience of this. So this was special about the design thing. Now in our country, primarily there are three kinds of models of SHG bank linkage. Model number one, which is SHGs which are formed, promoted, guided and also financed by banks. Under model 2 is slightly different. SHGs are formed and promoted by non-government agencies, NGOs, but these NGOs take these SHGs to the bank to get financed. You remember the first model? In the first model, it's banks only who are forming SHGs, nurturing SHGs, guiding them and also financing them. But under model 2, these SHGs are being formed and nurtured or promoted by NGOs, but they're being financed by banks. And under model 3, SHGs are being promoted by NGOs and financed by banks using NGOs or other formal agencies as financial intermediaries. Or in other words, if I want to share with you, it is various agencies like maybe Panchayati Raj institution, maybe NGOs or microfinance institutions, or maybe federations or maybe primary agriculture societies, they take the bulk loan from the bank and in turn they on lend to SHG members. So that is the model number 3. Now this was about SHG bank linkage program. But there's, apart from this, in India we had another very popular approach which emerged during this SPLP launching and all experience, is called as MFI approach. What is this MFI? Microfinance institution approach. Now who are these microfinance institutions? My dear friends, you might have heard about them. The microfinance institution model in India is characterized by a diversity of institutional and legal forms. There are a variety of legal forms of MFIs. These MFIs in India exist either as trust, registered under the Indian Trust Act 1882 or Public Trust Act 1920, or they may be registered as Society Registration Act 1860. They can also be registered as MACs. You know what MACs is? Mutually Aided Cooperative Society Acts of the different states, and they are registered as cooperatives. It could be registered as NBFC MFI, that is non-banking financial companies. These are registered under Section 25 of the Companies Act 1956, or else they can be NBFCs registered with Reserve Bank. So these are for-profit agencies. So there are a variety of MFIs, and there are not a very kind of precise estimates of how many MFIs exist in our country. Roughly, as per the data, There are about 800 MFIs are existing in our country, and most of them, or rather all of them, are private agencies who are exclusively working for microfinance. Now, as per the Bharat Microfinance report of Sadhan in March 2008, the 223 member MFIs of Sadhan had an outreach of 14.1 million clients with an outstanding microfinance portfolio of rupees 5,954 crores. So you cannot underestimate the role of MFIs, especially in reaching the poor.
Dawn Foundation believes in and practices a kind of role evolution and devolution. What is that means? The initial 3 years we do a role of promotion of group promotion and creating a groups, clusters and federation. Once that part is over, that social intermediation part is taken by the group, federation and cluster. In that process, what happens is, if you really look at many of our federation, initial 30 or 40% of the groups is done by Dawn Foundation. The rest of the 60% of the groups are promoted by the leaders and their own federation people themselves.
பிள்ளைகளுக்கெல்லாம் பரிசு கொடுத்தா என்னென்ன கொடுத்தாங்க அவங்க ஆலோசனை தான் கொடுப்பாங்க. அந்த ஆலோசனைப்படி நம்ம தான் முன்னேறதுக்கு வழி பார்த்துக்கிறோம்.
சும்மா உட்காந்துக்கிட்டு வீட்டுக்குள்ள நீ இருப்போம், உனக்கு வந்து வேலையை கொடுப்பாங்களா?
அரசாங்கத்தோட சலுகை அடைக்குது சும்மா அரசாங்கத்துல இருந்து இது வரைக்கும் சும்மா கொடுத்துருக்காங்களா? அதெல்லாம் கிடையாது.
We don't even call it an SHG network. As far as the Sama Women's group goes, credit and savings is only one activity. There are, in fact, this was started with a triple E concept, which is education, equity and empowerment, and credit came only as a additional thing much later.
Now, remember I mentioned that there were many policy initiatives which were taken to boost the microfinance in our country. So I'm going to mention few very major landmarks in that direction. In January 1993, SHGs registered or unregistered were allowed by RBI to open saving bank account with the banks in January 1993. Further, to study the potential of microfinance movement, RBI in 1994 under the chairmanship of S.K. Kalia constituted a study on working group on NGOs and SHGs. Now, based on the recommendation of this Kalia committee report, banks were advised inter alia that financing of SHGs should be included by them as part of their lending to the weaker section, and that SHG lending should be reviewed at the SLBC, State Level Bankers Committee level, and by the banks at regular intervals. So you are seeing, my dear friends, how policy initiatives are trying to boost microfinance movement in the country by putting that under weaker section lending. To further promote the SHG momentum in the country, banks were advised by RBI in 1998 that SHGs which were engaged in promoting the saving habits among the members would be eligible to open saving bank accounts, and that such SHGs need not necessarily have availed of credit facilities from banks before opening saving bank accounts. Aren't you able to see the flexibility which is being induced through these policy initiatives to encourage more and more poor to come to the banking fold? Now, subsequent to this monetary and credit policy announcement for the year 1999-2000, banks were also advised that interest rates applicable to loans given by banks to microcredit organization or by the microcredit organization to SHG members beneficiaries would be left to their discretion. So that is deregulation of interest rate so far as microcredit or microfinance is concerned. Then further what happened? A task force on supportive policy and regulatory framework for microfinance was set up by NABARD in 1999, and in this Reserve Bank of India was one of the members. Now what was this task force doing? It looked into the entire gamut of issues related to microfinance, particularly regulatory issues. Now, recognizing the growing importance of microfinance, RBI constituted a microcredit special cell in the bank in 1999 to suggest measures for mainstreaming microcredit and accelerating flow of credit to microfinance institutions. Now, this special cell has since been converted into a microfinance and financial inclusion division in the Reserve Bank. My dear friends, you have known about financial inclusion in one of our sessions. Now, based on the report of this special cell constituted in the Reserve Bank and the Task Force on Supportive Policy and Regulatory Framework, RBI issued comprehensive guidelines to banks in February 2000 for mainstreaming microcredit and enhancing the outreach of microcredit providers. And you know who all are microcredit providers? They are government agencies, they are banks. Banks means all kind of bank, commercial banks, RRBs, and then cooperative banks, and also private banks now, and also NGOs. So there are various agencies which provide the microcredit. Now these guidelines stipulated that microcredit extended by banks to individual borrowers directly or through any intermediary would from then onwards be reckoned as part of their priority sector lending. You know that 40% of their funds has to be under priority sector lending. So banks were given freedom to formulate their own models or choose any conduit or intermediary for extending microcredit. Now banks were also permitted to prescribe their own lending norms so as to provide maximum flexibility with regard to micro lending. Why it was done? Because their local things have got their own needs and own requirement to suit the local needs, and also to provide that local flavor. This kind of things were permitted. Such credit was to cover not only consumption and production loans for various farm and non-farm activities of the poor, but also include their other credit needs. Banks were asked to delegate adequate sanctioning powers to branch managers and to keep the loan procedures and documents simple for providing prompt and hassle-free microcredit. Because if the procedures are cumbersome, then naturally the poor are out of reach the way they were before microfinance operations became such a movement. Now the rapid development of the sector required addressing the various issues associated with the sector. In October 2002, the RBI set up 4 informal groups to look into issues related to the structure and sustainability, then funding, regulation, then capacity building of MFIs. Taking into the consideration of recommendation of the groups, banks were advised that they should provide adequate incentives to the branches for financing SHGs, and that the group dynamics of working with the SHGs should be left to SHGs only. Based on the recommendations of Advisory Committee on Flow of Credit to Agriculture and Related Activities from the banking system under the chairmanship of Professor V.S. Vyas, which submitted its report in June 2004, it was announced in the annual policy statement for the year 2004 and 5 that in view of the need to protect the interest of depositors, MFIs would not be permitted to accept public deposit unless they complied with the extant regulatory framework of the Reserve Bank. However, as an additional channel for resource mobilization, RBI in April 2005 enabled NGOs engaged in microfinance activity to access the external commercial borrowings, but there was a ceiling up to $5 only, 5 million, up to $5 million during a financial year for permitted end use under the automatic route. In order to examine issues related to rural credit and microfinance, an internal group was set up in 2005 under the chairmanship of Shri H.R. Khan. It gave a landmark kind of recommendation, and after that, what was introduced? The concept of banking correspondent and banking facilitators, Why do I say that they are landmark? Because this concept facilitates doorstep banking, a kind of agency model. We'll discuss about it subsequently. So based on the recommendation of Han committee, what happened? The objectives of ensuring greater financial inclusion and increasing the outreach of the banking sector, the banks were permitted in January 2006 to use the services of NGOs, SHGs, MFIs other than the profit making, that is NBFCs, and other civil society organization as intermediaries in providing financial and banking services through business facilitator and business correspondent models. Now, my dear friends, if you can see this, what exactly is this for? This is to facilitate greater access of poor to the banking services, as many of the time banks are overloaded with the work and it's very difficult for them to reach to the poor. That's where the problem had occurred earlier. So this agency approach, where BCs and BFs in the form of NGOs, SHGs, MFIs or other organization would help the poor to reach to the banks or banks to reach to the poor. So all regional directors of RBI were advised in April 2006 that whenever issues relating to microfinance were noticed in the areas under their jurisdiction, they may offer to constitute a coordination forum comprising representatives of state level bankers committee, convener banks, NABARD, SIDBI, state government officials, and representatives of MFIs including the non-banking financing companies and NGOs and SHGs, to facilitate discussion on the issues which is affecting the operation in the sector and find local solution to the local problems. So this is more on a decentralization to provide more flexibility to address the local issues. In May 2006, a joint fact-finding study was conducted by RBI and a few major banks, and it was observed during the study that some of the MFIs financed by banks or acting as their intermediaries partners were focusing on relatively better banked areas and trying to reach out to the same set of poor. So what will happen? It will result into multiple lending and overburdening the rural household, and those areas which are unbanked are left out. Whereas the concept for what? It was for those areas which are still unbanked to enhance the access of poor to the banking fold. So further, many MFIs supported by banks were not engaging themselves. That was the study outcome. They were not engaging themselves in capacity building and empowerment of the groups to the desired extent, and banks did not appear to be engaging them with regard to their systems, practices and lending policies with a view to ensure better transparency and adherence to better practices. So what happened? Seeing these kind of results, the guidelines were issued to banks in November 2006, advising them to take appropriate corrective actions.
The microcredit schemes are really giving very small loans to these groups, and it's not adequate for sustained income generation on a large scale. So I think while it can provide some immediate relief, so instead of borrowing 500 rupees for medicines from the local moneylender, I can borrow it from my microcredit scheme at a lower rate of interest, and that is definitely some relief at having to pay 10% or 12% rather than 60% per annum. But it's not adequate really to either change the structure of rural credit or to alleviate poverty.
In very rare cases possible for microcredit alone to lift a poor household completely out of poverty. But having said this, it's very important to remember that when one is having a household income of say 1,000 rupees a month, an incremental 200 rupees a month is a 20% increase, and that is, goes a long way to alleviate some of the most negative impacts of poverty. For example, not having enough money for medicines when a child is ill, or not having money to buy food during the lean season. So in that sense it helps, but is microfinance the answer to poverty alleviation by itself? I would say no.
The Union Budget for the year 2008-9 announced that banks would be encouraged to embrace the concept of TFI, that is Total Financial Inclusion, and government would request all the scheduled commercial banks to follow the examples set by some public sector banks and meet the entire credit requirement of SHG members. And what are the credit requirement of SHG members, my dear friends? You can guess it also. It is income generation activity, social needs like housing, education, marriage, and then it could be debt swapping. So consequent upon this, in April 2008, banks were advised by RBI to meet the entire credit requirement of SHG members, and this was envisaged in the union budget. Now, NABARD has also taken recently a few initiatives to boost the microfinance sector and then enhancing the outreach. Some of these are which I'm going to discuss with you. First, NABARD organizes on a regular basis and also sponsors training program and exposure visits for the benefits of bank officials, non-government organization, SHGs, government agencies to enhance their capacity in the field of microfinance. Then also the best practices and innovation with respect to microfinance sector, they are widely circulated among the government agencies, banks and NGOs. NABARD also provides support for capacity building and exposure visits for the awareness building of SHGs and NGOs. Then apart from that, NABARD had launched in 2006 March a program called Micro Enterprise Development Program for the skill development of the SHG members. And the purpose was to enhance the capacities of mature SHGs to take up the micro enterprise through suitable or appropriate skill upgradation. The program envisaged development of enterprise management skills in existing or new livelihood activities, both in farm and also in non-farm sectors. The duration of training could vary between 3 to 13 days depending on the objective and the nature of training. In 2005 and 6, the pilot project for promotion of microenterprise was launched among the members of matured SHGs. NABARD also provides marketing support to SHGs for organizing an exhibition of their product. In 2007 and 8, NABARD supported 3 exhibitions of product prepared by various SHGs at the cities called Bhopal, Chennai and Navi Mumbai. NABARD also provides promotional grant support to NGOs, RRBs, cooperative banks, farmers clubs, individual volunteers, and assists in developing capacity building of various partner agencies. It has been making effort to increase the number of partner institutions as SHPI. SHPI stands for Self-Help Promoting Institution. In December 2003, NABARD launched a pilot project to link post offices with the SHGs. Why post offices? Because we know there is a large network of post offices in rural area. So this will help in the disbursement of credit to rural poor on an agency basis, and it will also increase the outreach. The SHG federations are also emerging as important players in nurturing SHG, increasing the bargaining power of group members and livelihood promotion. So the features and function of SHG federation models promoted in the country vary depending on who is promoting them. Recognizing the growing role of SHG federation, actually they are very important in the sustainability of the SHG. So recognizing the need and the value addition to SHG functioning, NABARD in the year 2007-8 decided to support the federation also on a model neutral basis. Now this support is extended to federation by way of grant assistance for training, capacity building and also exposure visits of SHG members. Now recognizing the role played by MFIs in extending microfinance services in the unbanked area, NABARD extends support to these institutions through grants and loan based assistance. It also provides funds in the form of revolving fund assistance on a selective basis to MFIs to be used by them for on lending to SHGs or individual. The loan has to be repaid along with the service charge within a period of 5 to 6 years. Now there is a need to rate MFIs to introduce the quality. So in order to identify, classify and rate MFIs, NABARD introduced a scheme for commercial banks and regional rural banks to enable them to avail the services of accredited rating agencies for the rating of microfinance institution. Banks can avail the services of credit rating agencies, some of the popular ones called as CRISIL, MCRIL, ICRA, CARE and Planet Finance for rating of MFIs and avail financial assistance by way of grant to the extent of 100% of the total professional fees of the credit rating agencies, subject to a maximum of rupees 1 lakh. Now, this assistance is available for the first rating of MFIs with a minimum loan outstanding of rupees 50 lakh and maximum loan outstanding of rupees 500 lakh. Now, recognizing the need for upscaling the microfinance intervention in the country, the Union Finance Minister announced creation of a Microfinance Development Fund, that's called as MFDF. The Microfinance Development Fund is created for the purpose to facilitate and support the orderly growth of the microfinance sector through diverse modalities for enlarging the flow of financial services to the poor, particularly for women and vulnerable sections of society, and which is consistent with sustainability. Now, consequently, Microfinance Development Fund with a corpus of rupees 100 crores was established in NABARD. The Reserve Bank and NABARD contributed rupees 40 crores each to the fund, while the balance was contributed by 11 select public sector banks. Now, as per the Union Budget announcement for the year 2005 and 6, the MFDF, Microfinance Development Fund, was redesignated as Microfinance Development and Equity Fund with an increased corpus of rupees 200 crores. Now, the fund is being managed by a board consisting of representatives of NABARD, commercial banks and professional with a domain knowledge. RBI is a member of the advisory committee of this MFDEF, which stands for Microfinance Development and Equity Fund. So, this was major policy initiatives which NABARD has taken, and also other initiatives which various agencies have taken to boost the sector. Friends, in the next session, we would talk about what are the various processes innovation in the microfinance sector. Thank you.